Hello, and welcome to this edition of the Inside Scoop. I am Sam Beveridge, Customer Risk Manager with Ardent Mills Solutions. Finally, the long-awaited suspense is over as the USDA released their much-anticipated August supply and demand report, which validates the debate over the size of the U.S. corn crop, as late plantings and poor weather have played a large fundamental role on the prices over the last 6 weeks. And not to mention, the USDA did it again. The USDA estimated 90 million corn acres with a yield of 169.5 bushels per acre, giving us a 13.9 billion bushel crop. Soybeans were 76.7 million acres with a yield of 48.5 bushels. Shortly after the report, corn found itself limit down, with wheat and soybeans following suit. This was a very hard day for the American farmer. As you can see, combined carryout of U.S. grains has continued to grow. When we come back, we will look at the data and discuss the potential of what could happen next. Hello and welcome back. Looking at corn, the market news has been dominated by weather forecasts, rainfall, and the U.S.-China trade talks. Supply concerns kept a bullish sentiment in the market as prevent plant acres were on the rise from early spring estimates. This chart was the price of December corn as of July 12th, which was the last time I put on the makeup and talked to you about the grain markets. As you can see, prices appreciated 90 cents from the May lows. How could the U.S. get a crop in the ground when the weather was so wet? Many did not know. Trade estimates believed that we would lose a significant amount of production, with acres decreasing from 91.7 million acres to as low as 84 million, and decreasing yields as the relative maturity window was quickly disappearing. For 6 weeks, the market waited to see the USDA resurvey acres, and they did not show a historic loss of acres that many were looking for. The USDA merely cut 1.7 million acres and gave a slight increase to the previous yield estimates. This year's corn crop is expected to reach 13.9 billion bushels based on an average yield of 169.5 bushels per acre, taking forecasts almost 800,000 bushels higher. That is huge, and the supply shock has hit the market. As you can see, I took the same December chart from earlier with the blue line where the last chart stopped and where the past month has continued. While this was more corn than the market expected, we still have demand uncertainties as ethanol and exports were marginally lowered by 125 million bushels. We expect prices to remain bearish until we see harvest data to prove us otherwise. Now, turning to wheat. I have said it before, we are trading wheat versus the price of corn. The results of the USDA report had a bearish impact on the price of wheat. Additionally, U.S. yields were surprisingly raised from 50 bushels an acre to 51.6 on the increase of 25 million bushels of spring wheat production, and hard wheat was up 35 million bushels. Exports offset some of the increased ending stocks, and we will note that the U.S. hard wheat is likely becoming a value to the world, barring variable freight components and trading issues. Outside of the futures pushing lower, the discussion for wheat should really focus around the basis side of things. Farmers and commercial operators with storage will likely be reluctant to sell in this low futures environment, and basis will have to do the work to support a higher flat price back to them. As a flour buyer, one might consider taking prudence in securing basis for the next year, as spring wheat demand will likely remain as a counter to the low-protein hard wheat crop for the miller. 12% flour protein basis is expected to stay firm with today's inputs and price action. Moving into soybeans, the WASDE lowered the U.S. acreage from 80 million acres to 76.7. Not surprising, however, these production cuts seem to be dismissed as we look at the cuts to global demand, primarily in China, as the U.S.-China trade wars continue not to see much progress. Headlines this week are stating that September meetings may not happen as both sides are at a stalemate. The U.S.'s Chinese export demand was reduced 100 million bushels since last month, and global demand was reduced 2 million metric tons. In closing, this report at face value gave the market an unpromising tone in terms of futures prices. We continue to have a surplus of wheat, corn, and soybeans, and the market should continue to have reactions to the Chinese trade war impacts and the impending weather forecast over the next couple months as we get corn and soybeans harvested. From a flour perspective, please continue to reach out to discuss the markets and the timing of your flour purchases. Futures and basis will likely continue to show volatility, and we are here to answer any of the questions you may have. Until next time, have a wonderful day, and thank you for watching.